Hey everyone, welcome back to another exclusive podcast from IronFX, where we're dedicated to bringing you the absolute best education to help you take your trading to the next level. I'm your host, Desmond, and today we're diving into a topic that sent shockwaves through the financial world. President Donald Trump's sweeping tariffs announced on Liberation Day, April 2nd, 2025. In the next few minutes, we'll unpack which major trading partners got hit, how markets reacted, and which asset classes took the biggest blows. So, let's get started. On April 2nd, 2025, US President Donald Trump unveiled what he called reciprocal tariffs, a bold move aimed at reshaping global trade. These tariffs targeted dozens of America's trading partners, with some facing duties as high as 54%. The goal? To address perceived trade imbalances and boost US manufacturing, but the fallout was immediate and far-reaching. Let's break down who got hit and by how much. China, one of the US's largest trading partners, faced a staggering 54% tariff on its exports to the US, later escalated to 145% after retaliatory measures. The European Union was slapped with a 20% tariff, Japan got 24%, and India was hit with 26%. Smaller economies weren't spared either. Vietnam faced a 46% tariff and Cambodia saw duties as high as 49%. Canada and Mexico, while dodging the initial country-specific tariffs, still faced 25% tariffs on non-USMCA compliant goods, especially autos, steel, and aluminum. These numbers are massive and they signal a seismic shift in global trade dynamics. So how did financial markets react to this bombshell? In a word, chaos. The announcement triggered the worst two-day loss in US stock market history, with $6.6 trillion in value wiped out on April 3rd and 4th alone. The S&P 500 plummeted nearly 5% on April 3rd, its biggest single-day drop since June 2020. Global markets followed suit. Japan's Nikkei index tanked 4%, and European shares weren't far behind. Investors scrambled for safe haven assets like bonds and the Japanese yen, while the US dollar weakened against major currencies like the euro and yen, which is unusual during market routes. China's yuan hit a 19-month low, caught in the crossfire. The bond market wasn't spared either. US Treasury yields spiked amid volatility, with the 30-year SOFR swap spread hitting a record low, signaling stress in short-term funding markets. Oil prices also took a hit, dropping 7% initially and later stabilizing around $57 per barrel, the lowest since 2021, as fears of a global recession loomed. Even Bitcoin, which some expected to thrive under Trump's policies, crashed 30% from $109,000 to $77,000. Markets were screaming one thing: uncertainty. Now, let's talk about the asset classes that got hit the hardest. Equities, especially those tied to global trade, were ground zero. S&P 500 companies lost $2.4 trillion in value in a single day, with multinational firms like Nike and Apple seeing after-hours drops of around 7%. Retailers reliant on imports like Five Below and Dollar Tree saw shares plummet 15% and 11% respectively. Tech stocks, including Nvidia and Tesla, weren't spared, with declines of 4.5% to 6%. Commodities also felt the heat. Oil's sharp decline reflected fears of reduced global demand, while metals like steel and aluminum faced supply chain disruptions due to targeted tariffs. Currencies of major trading partners like the Mexican peso and Brazilian real weakened significantly. Mexico's peso fell to 20.89 per dollar, and Brazil's real hit 6.00. Meanwhile, safe haven assets like US Treasuries and the yen saw mixed performance, raising questions about their reliability in this new trade war era. So, what's the takeaway? Trump's tariffs have unleashed a storm of uncertainty, hammering equities, commodities, and currencies while leaving safe haven assets on shaky ground. While the administration later paused some tariffs for 90 days, the damage was done, and markets remain on edge. As investors navigate this new reality, one thing's clear: volatility is here to stay. That's all for today's episode. Thanks for tuning in, and in the meantime, do remember to subscribe to our podcast here at IronFX, where we're dedicated to bringing you the very best education to take your trading to the next level. Until then, stay informed and stay tuned.